Welcome to the Bond Broker Changes webinar. Today we're going to be discussing some very important law changes that will affect the business of brokering freight. And these laws are going to affect brokers of all sizes. This is a very complex issue, and we're going to try and detail some of the key issues that freight brokers are going to be facing and present a few possible solutions to help your company stay competitive and stay in business. The key here is that with knowledge, you can take action. If you clearly understand what's happening in the marketplace, you can assess the possible effects and what those laws are going to do to your business, and you'll be in a better position to take action and protect your livelihood and make some of the serious decisions you may have to make about your future and your freight brokerage business. So today's webinar, we're going to cover what the new laws are, how the new laws will affect your business, what options you have, and what solutions ITS offers. So what are the new laws? On July 6, 2010, the Moving Ahead for Progress in the 21st Century Act, also known as MAP 21, was signed into law. The idea here was to fund surface transportation programs, and it committed $105 billion for new roads, repairs to bridges and tunnels. It reduces 90 departments down to 30 and creates a national freight policy which governs all of the freight management and carriers alike. Basically, for brokers, the biggest controversy is the new broker requirements. In an effort to protect smaller carriers from fraudulent or abusive brokers, the MAP 21 bill puts a number of new requirements on the bond that's required for brokers, increasing the bond from $10,000 to $75,000. The new laws come into effect on October 1st, 2013, and will affect every freight broker. There are a few other things in the bill that will affect brokers. Carriers must now have a broker authority, meaning that freight carriers can't broker additional or overload freight without having an actual broker authority. Every company has to have an industry expert, or something they call a qualified individual, on staff, any new registrants into the freight broker business. There will be annual renewals of your authority as opposed to the lifetime authority. You can go online to the FMC website if you actually would like to read the entire bill. For some people, this may be of interest to you. If you do wish to take a look at the actual bill, you can go to the FMCSA website, which is www.fmcsa.dot.gov. And on the website, you'll see the MAP 21 icon. If you click on that, that'll take you to some pages with some other details about it, and it'll also give you some direct links to the actual bill. So you can see here we've got a pretty comprehensive bill here. The bill is 584 pages long. So if you're not interested in reading the entire bill, you can focus on the sections that are specific to brokers, starting on page 418 with section 32.918, and it ends on page 423 with section 32.919. The real question here is, how will these new laws affect you? Most large companies who deal with multinational businesses or a lot of carriers, they're not going to be affected. The $75,000 bond is the same for giant companies doing billions in revenues as opposed to the guy sitting at his kitchen table doing a few $100,000 a year. Smaller brokers are going to have increased costs because of the fact that they're going to have to support the higher bond increase. And there are actually lawsuits already in place. There are a number of groups that have decided that the law is either unconstitutional or is not in support of the industry as a whole, and they are placing lawsuits. Until the time that those lawsuits come to pass, right now the government is required to reassess the laws after 6 months, and then every 4 years after that, just to ensure that there's no ill effects to the industry. So that is the basis of some of these lawsuits that are in place. There are also going to be, in the law, stricter requirements for bonding providers, people providing the bonds. They're going to be required to pay within 30 days. If not, they'll have to pay the claimants attorney fees, which makes them a little bit more strict on who they accept as bonding companies. There's also going to be significant enforcement against double brokering, and that's one of the reasons why they're going to be requiring carriers and brokers alike to have individual broker licenses. And the carriers requiring the full bond and authorities will be required to have the full bond even if they have an additional bond for their carrier companies. One key component of the MAP 21 law is that MC numbers cannot be reused. So the practice of companies purchasing older defunct companies and buying their low MC numbers to create the impression that they've been in business for a while can't be done. And in addition to that, the FMCSA is putting forth a system where they will require that the owners of the MC numbers have their names, addresses, business information on a publicly available website. As we discussed, brokers and carriers new to the industry must have a qualified individual. So they're looking for someone with at least 3 years of industry experience or that can provide significant or appropriate evidence that they are knowledgeable of the industry. Just to give it a quick recap, the process to become a broker is quite simple. You apply for a DOT number, you file what they call an OP1 form, you complete a BOC3 form, which is basically a process agent form. This is assigning your legal representation in each state that you do business with and in each state that you sign contracts from. You do have other options as far as finding out what to do about qualifying for the bonds. The first thing that you need to do is find out where you stand right now. Talk to your lawyer, accountant, your banker, and insurance company to get a clear idea of if you qualify for the bond and what to do if you don't. One key thing that we want to point out is that a surety is different from an insurance policy. A surety is basically a backing that says that you will pay claims. An insurance policy is a set amount that is applicable if a claim is made. First thing to do is to call your insurance company and they can tell you if you qualify for the increased bond. Second thing, if you don't, is to call your accountant to find out how you can maybe organize your financial documents in a way that helps improve your financial position so you may qualify by resubmitting. You may also wish to call your lawyer. There may be some different things that you can do to set up your company in a different structure, or you can also help you create a trust fund, which will allow you to possibly qualify for one of the different types of bonds. And also you call your banker. They might be able to help you get a letter of credit, which can be useful for collateralizing your bond if you're going with the trust fund account. So one thing that you need to understand is the difference between the BMC 84 and the BMC 85. The BMC 84 is the form that you file to file for a surety bond with the FMCSA. This is done electronically, and when you file that with the FMCSA, they have that on file. And basically, it's just listing that you've got an insurance policy in place to cover for any claims. The BMC 85 is the form you file for a trust fund with the FMCSA, and what that is that there's either a cash or cash equivalents like a line of credit that supports the bond as opposed to an insurance policy. And that usually requires that you put up your own money or collateralize things like your mortgage or assets in order to cover that. Either decision, either way, make sure that you deal with companies that have industry experience in the transportation industry. The last thing you want to do is deal with companies that are just getting into this business and don't understand the specific needs of your business. So what happens if you don't qualify for the $75,000 bond? The new laws, like we said, come into effect October 1st, so you have just a little over 4 months to get ready. There are certain groups, bonds, or trust funds available. Sometimes the fees can be significant, but basically that's pooling your group, pooling you into a group of other companies that qualify for one bond and working under one MC number. You could consider partnering with a larger company. One of the key things to remember when partnering with a larger company is to be careful. There are a lot of companies out there that advertise agents wanted, and you've got to remember that not every company is knowledgeable about how to run a partnership model. When it's done right, it can work great. When it's done wrong, it can be very, very troublesome. You could try to sell your business. One problem with that is that there isn't really a huge market for brokerages. Basically, you're looking at selling your client list, and unless you're doing several $1 million in business, there aren't that many companies looking to buy that sort of thing. Last but not least, and of course, for some people it may be the reality, you may have to close your doors. And hopefully we provide some solutions that can help you from having to do that. There are some solutions that ITS does offer, and ITS is offering a full BMC 84 bonding option. You can find out about this by going to surety.itsfs.com. You can find this on the Truck Stop website by clicking on insurance and going down to broker bonds. When you click on this, it's going to open up a detailed page with some qualifications for the Diamond Broker Bond program. If you're a Diamond broker, you're automatically qualified for this. If you're not a Diamond broker, there are still options, which we'll discuss here in a moment. There's automatic acceptance, as I said, with a Diamond broker, and the costs are in the $5,000 to $77,000 range. There's a $75,000 bond available and a $100,000 bond available. The cost for the first year for the $75,000 bond will be $5,845, and members should expect to pay $2,845 in future years. For the $100,000 bond, there will be one initial fee of $7,695, and members can expect to pay $3,695 to maintain the bond in future years. You can log on, as we said, to the Internet Truck Stop for the Diamond Broker program. Simply enter in your MC number and you'll see a list of what options you qualify for based on your MC number. What if you're not a Diamond broker? You can still qualify if you have at least 1 year of experience with the truck stop with no credit issues. The key here is to get references and improve your days to pay score. If you are not a Diamond broker, you will need to have an A rating, and normally an A rating requires 3 references and a payment history of 30 days or less. If you don't have 1 year or you don't have enough credit references, start getting your references now. We suggest that you get 5 carrier references and ideally show it 15 days to pay or less. This doesn't guarantee your acceptance into the program, but it significantly improves your chances. Once you have your references in place, you can submit your references to the ITS Credit Department for review. If you have any questions, you can call 1-800-203-2540 at extension 3 and then option 2 for the Assurance Department. They can explain anything else or any other details that you may require before getting your references. You can also join us on our forums and look for topics called broker bond changes. We'd be happy to hear if you have any questions, and you possibly can benefit from the insight of other freight brokers who have posted some of their details and topics there. Once again, we know that this is obviously some decisions that need to be made, and we hope that we provided some solutions and some options that can definitely help you out. We thank you for your time and wish you the best of luck.